Hi, everybody. Welcome to Advanced Trading's Market Recap. This is Michael Reginelli. I'm here with Brian Basting and Jeremy Strubhar. We're going to be talking about the June 30 quarterly report for the USDA. So we look at June 1 stocks and acres here. Normally one of the busiest three or four reports of the year. Today, probably not so much, but we'll dig into it a little bit here. So we'll start with Brian. Brian, corn acres, 95.2, a little below expectations. Bean acres, 83.3, also touch below what the trade was looking for. What stood out to you in general and at a high level?
You know, I think that the survey was taken the first 2 weeks of June, Michael. So we have to take these numbers as being fairly close to what the reality will be at the end of the crop year here. There may be some tweaking down the road, but minimal. So I think these numbers now are what the market's going to work with. Yeah. And as you said, very little change from those March estimates. There had been an indication from the trade that maybe we're going to see more acres in the West at the expense of fewer acres in the East. To some degree, that was seen in various states, Michael. But to tell you the truth, at the end of the day, that report was right in line with expectations for the most part. So yeah. I think one thing that did stand out a little bit to me, Michael, was the harvested acreage number. Harvested acreage that the USDA now will adopt for their 25 acreage estimate was a little bit below what they've been penciling in there in their May and June WASDEs. Right. Very, a couple 100,000 acres, but something to think about going on. But I think we're back to trading weather now, Michael, as straightforward as it sounds. National Weather Service will come out this afternoon, updated July forecast. I'd remind the viewers. So we got a 3-day weekend coming up here. We'll see what the forecast holds. But Michael, we're moving into corn pollination. I think between now and probably the 25th of July, about 3.5 weeks, we'll pollinate half the corn crop. Yeah. So it's going to be back to weather. But back to your original question, I don't see a lot of movement based on the report itself.
With some of the areas, Brian, that were a little delayed and wet, South Central Illinois would be one example of that. There were some thoughts out there that we could see some maybe switching from corn to bean acres, i.e. take the bean acres up a little bit if corn was going to be down. With both dropping, is there a chance that we see a revision later on, or do you think this is kind of what we're using for the market as we plow forward here into the summer?
There have been in the past small changes, Michael, from the June report to the final. Occasionally you'll see a significant change, but it's just not often. Yeah. So what we'll see that in the past was from March to June. We didn't see that today. Mm-hmm. And I can't give you an explanation of why, other than maybe the offsets kind of offset each other. Higher numbers in some states and significantly higher and significantly lower in some states. But I don't think we're going to see a major change in the final numbers. Fair enough. I think, but you make a real good point. I think what that does do, Michael, is it might spread out the pollination a little bit more. For example, in Southern Illinois, they just had a heck of a time getting that crop planted this spring. Yep. So instead of pollinating, the 15th of July in far Southern Illinois, it might be closer to August 1st.
Well, and the Delta too, the acres look big, right? So when you think about that, we could have a lot more new crop corn available come last half of August and even into September, helping facilitate that early stage export program too. So
that's an important point, because that is the first corn that would feed the pipeline there in the first of August, or like say in this end of August, 1st September.
Yep, absolutely. Cool. Thank you, Brian. Jeremy, from a stock standpoint, looked like June 1 corn stocks, 4.64, not a lot, close to expectations. Any takeaway?
Short answer, not much.
Yeah.
As you said, very close to expectations. We are thinking feed juice is probably going to go down, offset by some increase in exports. Sure. We'll find out on July 11th. Mm-hmm. But no, in the meantime, a very status quo number without much to get excited about.
Yep. Yeah, no disagreement here. I do think the feed number could be important. It seems like the USDA has been lagging all year, given the competitiveness of soybean meal. You look at the grain consuming animal units, cattle on feed. It all would seem to suggest that corn feeding is overstated, but we haven't seen it up to this point.
No, not to this point.
Yeah,
maybe in July, maybe not till the fall.
Yep, for sure.
I might just add one thing on that, Michael, that there's a sleeper there, maybe that the USDA might bump up the corn crop estimate in their September report, but we won't get that till September 30th, Michael. Yeah. So that's way down the road. Right. But in between now and then, I agree with Jeremy. I think we're going to see the feed residual tweak down a bit next week. But as Jeremy said, tweak the exports up.
Right. Yeah. It could just all wash out.
Could all just wash out.
Yeah. Not a lot on bean stocks, I don't think, Jeremy, but you tell me different. Just above 1 billion bushels, and anything that jumped there?
Once again, very close to expectations. Nothing to get real excited about. Probably the old crop is understated, which is what led to the increase in that number.
Mhm.
So we'll see if they make other adjustments, but that could just be a straight line addition to our carryout on the July 11th
Yeah.
report.
Yep. Nope, that's fair. Brian, on the wheat side of things, wheat acres slightly higher than expectations, 45.5 roughly, a little above March, I guess I should say. Anything that you can see that's driving the increase, or any comments even from a harvest standpoint, as wheat harvest, hard red and soft red are working their way north?
It really flew under the radar, Michael, but you have to look really closely at this report and look at the harvested acreage for winter wheat.
Mm-hmm.
And what they did was, compared to the June crop production report that came out earlier this month,
Mm-hmm.
they took almost 900,000 acres off of the harvested acreage. In other words, the harvested acreage number here at the end of June is 900,000 acres less than what it was in the crop production report. That number will be incorporated in that July 11th WASDE report. So the big numbers there, Michael, were they took, I believe, between Texas and Kansas, 650,000 acres. Now that Texas had some struggles with some dryness in parts of the area,
Right.
parts of the state early this spring. So did Kansas. But regardless, I think what we're going to see, Michael, is a smaller hard red winter production, or beg your pardon, smaller hard red winter acreage number.
Yeah.
And depending on what the yield results are, a smaller production number. I won't go that far yet because we're hearing some really good yields, Michael, on
Right.
these early, not only out west, but also here in the Midwest for the soft red crop.
Yeah.
So I think it's going to boil down now to, with not any shocks, and spring wheat acreage is unchanged, for example, up in northern plains. I think we're going to look at harvest results now. Encouraging to see these early results from producers. Some really correct me if I'm wrong, but 100 bushel wheat is not that uncommon for soft wheat early in the harvest.
Yields look fantastic.
Yeah. And we're seeing some good export demand, Michael, but just not enough to eat into that projected carry out.
Export demand in what class though, Brian? Just
I'd
to
say
clarify for people.
Historically, it's a good question. All classes are stronger than the 5-year average in
Mhm.
terms of unshipped sales. Hard red winter
Right.
is the strongest one by
Yep.
far.
Definitely.
Now, again, I don't want to paint the picture of this is a robust hard red winter program. It's not, but it is an improvement. And I think that what the market will have to decide here over the next 60 to 90 days is, do we have enough export pull to start affecting spreads, flat price,
Interior basis
and
values.
I'll defer to folks like you who you'll give a much better answer than that. But fundamentally, Michael, I'd say in the absence of a problem and a major competitor,
Yeah.
when I talk about Russia, Ukraine, Europe is experiencing some heat as this growing season ends over there, but I still think it's going to be a pretty good crop. In the absence of a problem amongst the major competitor, wheat is searching for demand still, Michael.
Right.
It's searching for demand, and it can't really compete in a feed ration when it's such a premium to corn.
It's hard to find a significant problem right now, though. Is that fair to say? Like there's some light concerns out there, but I haven't seen anything where we're code red critical issues globally.
No, not at the moment. I think we'll start to look at Canada spring wheat, for
Right.
example, and we'll look at the finish of this Europe. I don't want to discount that European situation entirely. Europe is a big deal, particularly with soft wheat. When you look at France, Germany, if they get a lot of heat, that may be influence things toward the end of the growing season. But for the moment, Michael, no red flags at the moment that would say we're going to swing a lot of export business to the U.S.
Yep. I think that's fair. Thank you. Jeremy, given today's acreage numbers, just global developments in general, I mean, as you're talking to growers and thinking about producers from a market standpoint, obviously prices have been on the defensive today. Didn't really shake the boat too much. I think people always look at these quarterly reports as potential catalysts or events to move the market. Not always up, sometimes down, but big movers, right?
Absolutely.
Now this is behind us. It's in the rearview mirror. Feels like we're tracking decently from a production standpoint. How should growers be thinking from a risk management, a marketing standpoint? What should they be aware of as we kind of continue to plow forward here in the summer, as you see it?
Well, obviously, we don't know what the end of the growing season is going to do.
Right.
We don't know where the weather is going to go.
Mm-hmm.
We were projected locally to have about 1+ inches of rain, and that's kind of fizzled out. We
Yep.
could use it. If we don't get a rain in 2 weeks, our yield will suffer. So for now, we just don't know what this crop's going to be.
Right.
So with that said, if you are sitting on old crop, I would sell it and look at buying a call.
Yep.
If we do have a big crop, the call will end up probably being worthless. But if we don't, you're still in it for the next couple of weeks or a couple of months. I'd buy September, and corn, I was looking at the 410 September, which costs about 14 cents. And beans at 10.30 November at 22 cents.
Yep.
So relatively cheap to give you that floor in case we do have a big crop.
Yep.
And we also have geopolitical events,
Right.
which are unknown.
A lot of unknowns. Yeah.
We have tariffs yet to be seen. So just a whole bunch of unknowns.
Yeah.
Is there much hope for higher prices? Yeah, there always is, but we cannot count. We cannot just sit here and bet the farm that we're going to get them.
Right.
So when looking at new crop, I'd also look at putting a floor under in the market to make sure if we do have that big bin busting of a crop, we are covered.
Mm-hmm.
A lot of guys are looking at crop insurance as your free, or not free, but your embedded put. And I'd just like to remind us, we do love crop insurance, but if we produce more than our APH and the crop insurance put level goes down. So if we produce 10% more, our embedded put just dropped 47 cents on corn.
Yep.
So we do need to look at getting a floor under this, and I'd look at buying the 420 December put corn, which is shy of 20 cents, I think around 18 and a half, and the $10 November bean put, which is right at 25 cents.
Yep.
Good ways to just set floors and make sure, even though it may not be a great profitable year,
Sure.
it's not as big of a loss as it could be.
Yep. And obviously, if we do get a market rally, we can always manage those up, increase the
Absolutely.
floor.
Yep.
It's a good thing for the
Absolutely.
net. Yep. Nope, that makes sense. Outside of that, I guess I'll kind of ask both of you. Anything else that market participants should be aware of? Like I said, this was a big report. Now it's behind us. We'll reconcile this information in the July WASDE coming up here in a couple weeks. It seems predominantly weather driven and order flow driven in a lot of ways. But I guess any closing comments or anything you guys think viewers should be aware of before we wrap?
I would just amplify what Jeremy said, Michael. And he did a terrific job of reminding viewers that there's always unknowns out there. And boy, look this year, Michael, more than ever, we're looking at Black Sea, we're looking at tariffs, we're looking at crop size,
Biofuel policy.
biofuel policy. We could go on and on. Maybe a trade deal with China that would include something similar to what we saw 6-7 years ago, whatever that'd be a big deal.
Yep.
Michael, I'd remind the viewers on the supply side, certainly don't ever want to see this happen again, but the derecho came through in 2020 and really surprised everybody. So to follow up on Jeremy's point, flexibility on that marketing strategy, give yourself an opportunity to be a participant if the market were to come back here at some point before harvest,
right?
And even after harvest, of course, too. But to just paint yourself into a corner and say the market's never going to come back, or the alternative, the market's never going to go any lower from where it is today.
Sure,
right. That's ill-advised. You got to be flexible. You got to be humble enough, for lack of a better word, to acknowledge these markets can always surprise us.
Yep.
Doesn't matter how long, if you've been doing it for a year or 40 years. These markets can surprise us to the upside and the downside. That's the really point that Jeremy emphasizes. And this geopolitical situation, Michael, boy, who knows what would happen if things really would fall apart.
Right.
But that's why you want to have that floor in place, but leave your upside open.
Yep.
No, absolutely. You summarized it perfectly.
Yeah. Yep. I think that's great. Well, thank you guys for the time. I think we'll leave it there. Thank you guys for watching. Please be sure to subscribe. The next video and report release will be on July 11th as we work through the June 30th data today. And until then, have a great 4th of July, and thanks for the time.